Well, good morning. I'm Marlin Bohling with you, your tour guide to the ag commodities, and we'll get you updated on our current quotes provided by Bar Chart now that the markets are open. And I want to remind you that we did have an overnight export sale reported this morning. Yeah, that was a bit of a surprise. We had some soybeans that were actually sold to Spain, of all places. 165,000 tons, and it was for old crop soybeans. So we'll add that to the mix, and we'll take a look at what the markets are doing here this morning. Did it help or not? Well, on the corn, we had a big rally overnight, and then we kind of sold off at the end of the Globex session. Remember, we had that big 5-point drop nationwide in the condition of the corn crop yesterday, and huge drops in the eastern half of the Corn Belt. Well, you had July corn after getting as high as 609.5 overnight. Now we're at 604, so we're a little bit higher, but that's only 6.5 cents higher. That's on the old crop. Now, if you look at the new crop, and that's the one that would be impacted by these crop conditions, well, it's only 3/4 of a cent higher at 537 3/4. Now, how does that work, you may say? Well, it's off of its overnight high by 9 cents right now. So remember, there are dry conditions, but there's also some rain in the extended forecast. Now on soybeans, let's take a look. July down 2 cents at 13.48 after a high last night of 13.61. On the November new crop, we're down 3/4 of a cent at 11.79. That's about exactly a dime off of our earlier high from last night. Now let's switch over to the wheat and see what's going on there. Well, in Chicago, July, we're up 6 3/4 now at 6.30 3/4, but that's still 18 cents off of our overnight high. Now, in the Kansas City market this morning, July only 3 1/4 higher at 8.25.5, got as low as 8.20. It bounced off of that by about a nickel, but we are still running 23 cents off of our overnight high. That's not a very strong performance on the wheat right now, considering the overnight trade. July Minneapolis wheat, 6 1/4 higher at 8.26.5 right now, 12 cents off of its overnight high. Well, a lot of slippage in the markets here as we get rolling on a Tuesday. Let's bring in Chris Swift of Swift Trading in Nashville and see what he thinks about all of this. That's not necessarily the best way to start out a trading day from the producer's standpoint.
You know, it's going to be awfully volatile with the rain. I've noticed last night watching the radars how much spotty rain a lot of people got west of Missouri. And then anything east over there, it seemed like there was nothing at all. So I think we're still dealing with the weather market right now, and it's about a 50-50. Those that are getting rain are very beneficial. Those that have not gotten it, still a little weak. But note that the beans, even when we see a flurry, beans are the weakest ones of them out there. So kind of note that I think a lot of that is due to the demand in the large South American crops.
Interesting why beans are weakening up, and we can bring them back up on the board here. We'll see what the nearby July contract is doing. It's down 3 cents right now at 13.47, and that's despite the fact that we had an overnight sale announced to Spain this morning. And then I did notice where, Chris, there was an analytical firm out of Australia that has reduced their production estimate for their wheat this coming year. They think it could be 34% less than what they had a year ago. That could end up being a big story down the road. We'll pause right here, and then Chris will open up our livestock trade on a Tuesday right after these messages. Now, as advertised, let's take a look at our livestock trade this morning. We'll see how we're starting out. We'll start with the live cattle board, and I guess you could call it mixed. You have the nearby June down 7 cents. August is down 30 cents. We're at 172.97. But October is unchanged at 176.32. We'll call it steady to weaker. How's that? Now it's down a nickel on the October. Not much movement at all, just kind of sitting there on the feeder cattle trade. Now here we're lower. You have the August down 80. Last trade 241.80. That's already a dollar and a dime off of our earlier high this morning. Not too far from our low of the day. September down 77 at 244.85 right now. So a lot of whipsaw action early in the trading session here, but a downward bias right now. If you look at lean hogs, well, how about that? They're higher and quite a bit. You have July lean hogs now up by $2.20, all the way up to 86.35 today. And August lean hogs now up $1.72 at 83.35. Let's go back to Chris Swift and talk about this. I know you talk about cattle all day long, and you know, we had the big run up in the cattle prices recently, and you had a big push higher in the wholesale beef trade. But today, it just almost seems like they ran out of gas.
And everything kind of in our world deals with the basis to it, the futures versus the cash. And what we're seeing right now is yesterday, day before yesterday, exceptionally wide basis. And then we saw a jump in the cash yesterday afternoon, a little over $8 in the index, taking it to 216.12. So we look over at the August futures at 241. That's still over $25 spread that is going to converge between now and the end of August. So now that we're seeing some of the cash market get a little bit of movement to it, we see the futures market kind of move back just a little bit, because once those sales are made, those clients no longer need those hedges on anymore. So they get rid of those hedges in there, and then we kind of see what happens from there.
The thing that made me nervous, Chris, and you know, I always admit I'm a contrarian, but I heard this morning on the national news a headline story about the fact that there could be a shortage of beef coming up in the next year. And that kind of sent shivers through my spine. Every time you hear that make the national headlines, a lot of times that means the party is about over. Does that concern you or not?
Absolutely it does, and we of course wonder how it is able to stay up there here this long, this high, because it does. For right now, it is making for some of the highest returns that cattle feeders have ever seen. It's phenomenal because of the current price increase. Now going forward with the price increase, the only way to profit from this point forward is to have even greater price increases, and that's where we're starting to see some consumer pushback on.
Well put. All right. Well, thank you for providing your perspective on this, and I appreciate the help. Chris Swift of Swift Trading in Nashville with a look at our markets at the open this morning.